We were bullish on gold since we saw the triple bottom in gold here. The target was 1740, and after that, since 1740, I told you the target is 1850 and 1920. And in this beginning of the month of January also, I told you stay long. Every time in every video, the daily analysis, the weekly analysis, I have been telling you till it stays above 1824, stay long and 1920 levels are achieved. I hope you all profited. Now what to expect next week? Whether it is going to retrace after three bullish candles and trade like this, or is it going to look forward to a direct bullish move taking it on the upside. We will see with the help of charts and indicators what should be our position next week. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which will keep you updated with the daily analysis and targets which I share for gold. In fact, twice a day I share the updates, so do watch that also. Let's start. First we'll look into the daily chart, followed with indicators, and towards the end I will give you the trading strategy and levels for next week. Do watch till the end. Now look at the daily charts. 1870 is now the base. You can see from here this rally has started, and we have seen couple of strong bullish candles here. That is first part to it. Probably we can expect a third bullish candle. That is possible. 1950 is a good resistance there for gold. So 1950, 1975 and 2000, these are the next resistance level. But we'll observe because the indicators now are overbought, so we'll see how it behaves. However, now 1870 is the base, because once it drops below 1870, then only it may show a confirmation of little bearishness, taking it till towards 1836-40 levels. That is first part. So till the time gold stays above 1870, probably we can expect bullishness. So what it will try to do, it may try to retrace a little slowly and then again look forward to a rise. That is first part to it on the daily charts. So 1870, 1818, 1880 levels I will look forward to only and only if gold breaks this zone, confirm this for little bearishness. Then I will look forward to 1830, 1833 levels, and then 1800 if it continues to drop from there. But this is only in the condition that if it tries to trade bearish and extremely bearish. Now also let's have a look at the 4-hour charts. On the 4-hour chart, see 1880, very good resistance, then 1900, and now it has achieved the next level. So it consolidated here for multiple 4-hour candles, and then this breakout has happened. Now possibly it can continue to rise a bit before looking forward to retracement. That is clear here on the daily charts, on the 4-hour charts. Now let's have a look at the weekly charts here. Now on the weekly charts, what I possibly expect is, see 2000 levels, and probably it is trying to cover up till 2000. From there a possible retracement forming cup and handle, and then from there again a little rise might take it above 2100. That is first part to it. So this is on the weekly charts. Probably it may take few more weeks for it to achieve these levels and these levels as well. So still, yes, this is what I am expecting in the near term. Maybe few months it will take, because see the distance here, it took almost 9 months to complete this journey. Now at least 3 months it might take like this, and then beyond that we will see how it behaves. So this is what is my expectation. So it means that possibly still there is a room for it to rise till towards 2000 levels, and this time if it rallies, it is going to be a very strongly bullish candle, because see the candle size is consistently increasing here, and increasing candle size, increasing bullishness, flat tops indicates that the bulls are very much there. It has not gone anywhere. Consistently we can see this. So this is first part on the weekly charts. Now next part is, yes, 2000 levels are going to be a very good resistance, and these are achievable levels also. So I'll wait for it to happen. If it trades above 1920, if it sustains above 1920, remember, if it sustains above 1920, because it is closed above 1920 itself, that means from Monday onwards, first thing is it has to stay above 1920. Next, the target is towards 1932, and if it trades above 1932, just stay long for gold in this week also. Possibly next target is going to be 1950, and if it breaks past 1950, further bullishness might take it till towards 1975 and 2000. So I will be looking forward to 1932 next week. If it stays above 1932, 1950 is the next target, and beyond that further bullishness might take it till towards 1980 and 2000. This is first part to it. Else what possibly can happen, because it has gone overbought on the daily charts for a couple of days, maybe initially it may try to retrace a bit. When I say retrace, 1900 is the first support, 1884, 80 levels are the next support zone, and 1870 is the strongest support zone. So even if it tries to retrace, it should not breach 1870 levels for next week, specifically for next week. And for the month of January, it is 1820. We have already said that till the time it trades above 1820, you should remain long. So this is next part to it. And hence, I will wait for 1932 to break and achieve highs. Beyond that, certainly more bullish momentum can be expected. Second thing is, even if it tries to retrace till towards 1900 and 1880, do not consider this as bearish. In fact, till 1870, do not consider this as bearish. In fact, you can buy again at 1870, 1880 levels. That is what we can expect here. Now, let's have a look at the monthly charts. On the monthly charts, half the month is passed by. See this candle here, $150 of move, and with that a support from 1820, $150 are 1970, and in fact we can expect it to achieve highs till towards this zone, which is going to be a next resistance zone at 2000. At those levels we will see how it behaves. So yes, in this month there is still little more bullishness is left for it to achieve on the upside. Now we have seen the charts. Let's have a look with the help of indicators. What are the indicators are suggesting? And yes, before we proceed to the indicators, remember this fact that on the, let's rather first have a look at the daily charts here and see. And you can expect at this point, we told that the Bollinger Bandwidth has narrowed and it will try to trade outside Bollinger Band such that the width can expand and then the movement can increase, and that is what precisely has happened since then. It is trying to push outside the Bollinger Band such that the width is getting expanded, and we can see now the width getting expanded here. Also, if you look at the 20 period moving average, see 50 and 100 period moving average, I told you here itself that it is diverging. This is increasingly bullish, and that is what we can see. Now it is taking the support here from the 20 period moving average, which is situated at around 1850 levels. That is the first part to it. Next part to it is, yes, it is trading outside Bollinger Bands. It can give couple more strong candles so that the width can expand further. And if you look at the directional movement, now look at the directional movement. This is extremely bullish here. You can see this divergence. This is indicating increasing bullishness. However, it is yet to see the extremes out there. Possibly it can expand further before it looks over to converge. Next is on the daily chart. See, the stochastic is trading overbought and possibly it can sustain a bit, but however a drop is imminent. A drop is possible. A drop is what we can expect very soon. So on the daily charts, a little retracement is possible before it looks over to a rise. The MACD is divergent and bullish, increasing candle size. It can continue to increase further. However, look at this here. On the MACD, this is also divergent, increasingly bullish, increasingly looking upwards here, continuously showing the bullish momentum. The RSI has come to overbought zone, and this is also indicative that a retracement is must sooner or later. It at max it can stretch for a week or so before it looks over to a drop, but a retracement is must here. Now if you look at the weekly charts, on the weekly charts you can see that now, see, this is the 100 period moving average. Now the 20-50 period moving average are willing to cross over. They are starting to converge, and this is the beginning of a bullish indication. This is happening after long here. Possibly they might cross over this time. And if you look at, see, also this was trading outside Bollinger Bands. Now the next week width will be expanded more, and we have to see, because the width is almost stretched a bit now. Possibly a retracement can be expected. The directional movement has started to diverge. This is bullish here. Now look at the stochastic. This is trading overbought again, and it is in fact has come to the extreme. So possibly a little more this week at least. See, the retracement is must, that is for sure. Only thing is I look forward to how high it can go, and how highs it can achieve First thing is it has to sustain above 1932 such that in order to confirm the bullishness. Now look at the MACD on the weekly charts, extremely divergent, extremely bullish here. And on the weekly charts, remember this crossover is happening at a bottom. It can sustain the bullish momentum for a little while from here. The RSI is also still comfortable and it is looking forward to enter into the overbought zone. Now look at the monthly charts here. On the monthly charts, 1800 is the base. It is still looking forward to achieve the high. See, the width of the Bollinger Bands is almost stable here. Possibly this month itself we can see 2000 levels and in fact higher high. See, we have seen this that it is trying to trade in this since long, since weeks, since months, and possibly now 2075 levels in this month or next month are achievable, but definitely I will be looking forward to a little more highs this month. And hence on the daily charts it can retrace a bit, but till 1880 zone, do not consider this as bearish, as it can possibly retrace till there and bounce back from those levels. Now we have seen the charts, we have seen the indicators. Time for us to define the levels for next week. And yes, if you want to learn the art of trading profitably, you should join my mentorship batch 19, which is going to start in first week of February. Do not miss this opportunity. Reach out to me for more details on same. My Telegram ID, my Telegram channel ID, and my email IDs are mentioned in the channel and video description. Now for next week, where to buy, I will recommend you to stay long above 1924 and then you can expect 1932. Now see, 1932, see, I am just taking 1924, though 1920, beyond 1920 I am still bullish, because if it stays above 1920, furthermore bullishness might take it till towards these levels. But remember, you can buy at 1924, then the next target is 1932, and if it stays beyond 1932, the nearest resistance first at 1940 and then at 1950. Any point of time, if it breaks 1940 1950 zone, stay long for 1975. This is going to be the next target, and beyond that I will look forward to 2000 levels. So above 1920, staying above 1920, the danger zone for gold is at 1940 1950. If even if it tries to rise, this zone is going to give it a very good resistance, and possibly once it breaks past this, further rise can be expected. Now see, on the other hand, there should be a little retracement. Even if it has to rise, it has to retrace a bit. And yes, if you see it rising for the first couple of days or till midweek, possibly you can expect that the weekend should be towards on the bearish side. So that is what we can expect for next week. On the downside, I will recommend you to sell here at 1908, below which 1900. Now 1900 is a very good support here. This is a good support. Then 1890, 1884 and 1880, and then below this 1870 till 1870. Why I am giving so nearby levels on the downside? See, the upside, the levels are a bit stretched. On the downside, these are very strong supports on the downside there. So 1900, every $10 there is a support. Until 1870, I will not consider this as bearish at all. Only below 1870 it will show little bearishness. So there could be a possibility of a little retracement. Achieving the highs at 1932, 1940, 50, it can retrace again on the downside, and then 1870, 1880 levels certainly are going to provide the good support, and from there again a possible rise towards the end of the month can be expected. This is the first part to it. Next, only if it breaks below 1870, then I will expect 1850, 1840 and 1824, which also I told you, for the month of January till the time it trades above 1824, do not consider bearishness in gold at all. It is going to remain bullish. Already we have seen 1920. There is further scope for it to achieve, but we have to remain cautious. A little retracement can be expected before it looks forward to a rise, and we have to look forward to this zone at 1940-50. If it breaks, further bullishness might take it till towards 1975 and 2000 levels. So take your trades accordingly. Trade with the stop loss, trade with the trailing stop loss, and do not forget to like, share, subscribe, and comment. Do watch the daily analysis and do join my mentorship batch, and please share it across. Please like the video. Thank you very much. Have a great profitable trading day ahead. Thank you.